And welcome to this week's Market Insights. We've got an action-packed week ahead with key economic data releases that could shake the markets up a little. Now, we've got inflation figures, durable goods orders, the Fed's preferred inflation gauge, and corporate earnings. Each of these events could bring some significant price swings. So let's dive in and get started. And we'll start with the UK. On Wednesday at 10 a.m, GMT +3, the UK will release its latest inflation figures. Now, last week, the Bank of England held interest rates steady at 4.5%, citing rising global uncertainty and persistent inflation concerns. Now, UK inflation remains above the bank's 2% target and is expected to climb further in the coming months. I mean, some people are talking 1, 2, 3% increase in that inflation rate. It's been driven by household energy costs and business adjustments to measures from Reeves' October budget. That's the Chancellor of the UK, which take effect in April. Now, in January, the annual inflation rate surged to 3%, the highest since March 2024. That was up from 2.5% in the previous month and exceeded the expectations and forecasts of 2.8%. Now, this spike led to a decline in the Great British Pound against some major currencies. Will this week's data add more pressure on the pound? Well, we'll find out soon, so keep your ears and your eyes open. Okay, next up, and we're heading to the US and the US durable goods orders. Now, also on Wednesday, markets will be closely watching the release of the durable goods orders. That's at 3:30 p.m. GMT +3. In January, new orders for manufactured durable goods jumped 3.1% month on month. That was the largest increase in 6 months and well above market expectations of a 2% rise. Now, this followed a downwardly revised 1.8% drop in December. Now, the data boosted the US dollar as confidence in the economy strengthened. Will this month's report confirm an upward trend, or will we see another surprise slowdown? So keep an eye on this key indicator and don't forget your risk management techniques. And staying in the US, and it's Friday at 3:30 p.m. GMT +3, the US Price Index is released. Now, this is the Fed's preferred inflation gauge. Now, while February's CPI report indicated easing inflation, this release could provide further insight into market conditions and the Fed's future monetary policy moves. With Trump's trade tariffs pressuring markets and lingering fears of stagflation, a higher than expected inflation print could spark market volatility, so do stay alert. So finally, and aside from the key economic data, corporate earnings reports of major companies may trigger some significant market reactions. Now, whether earnings exceed expectations or fall short, volatility is almost inevitable. Traders should stay prepared and ensure their risk management strategies are in place to navigate potential price swings. Well, that wraps up this week's Market Insights. Unexpected economic and geopolitical events can lead to higher volatility, as we have seen recently, so staying informed is crucial. For real-time updates and expert analysis, visit the news and analysis section on our website. Thanks for watching and good luck with your trading in the week ahead. Bye for now.